Good afternoon, ladies and gentlemen. I hope you can hear me. Okay. Hope you can see the screen. If you can just ping in the chat box, that would help me enormously. Just the fact that you can see and hear me, that would it's a good start as always. Okay. That's great. Thanks, Dave. Nice to see you here. Yeah, cheers, Peter. Thank you. I know there'll be a couple of people joining in as we go along and stuff. But listen, nice to you to join us here. Here we go. Listen, Friday, 20th of March, 2020. Let's have a little bit of a look at what's been going on. As always, as I said, these sessions are only supposed to be sort of kind of just a little daily update on what we're looking at, what we're seeing, just to let people have the opportunity to sort of just get other views on the market, just to sort of see what other people are looking at. But as always, all the information provided is for educational purposes only, and trading on margin carries a high level of risk, and you should be aware of all the risks associated with trading, and seek advice from an independent financial advisor if you have any doubts. Most of you all know me. Okay, I'm none at the top. All right, I'm a trader, which means I'm always looking at things as being able to look at managing risk. Okay, that's during these rather eventful times. That's what we're actually interested and focused on. So I thought today what we'd look at is let's have a little bit of an interesting look at China. Okay, in the words of Father Ted, a great bunch of lads. So here is the China A50 market. I don't trade the China A50 market, but I do keep an eye on it just because of the nature of it. Certainly, I've been very, very keen on watching it over the last few weeks and months. But here, I've just taken a bit of a screenshot. This is a chart. Those of you who joined me at my Liverpool classroom sessions and stuff, that's what I've talked about here. Okay, and we just talked about. Let me just use my drawing tool whilst we've got them here. Is just literally a case of, we identified the kind of level of resistance, was kind of wondering whether we were actually just having an ascending triangle in an uptrend building. And what we had last year was basically, it was all over the shop as they toed and froed over the US-China trade talks. Then once we realized that there was a deal happening, okay, we saw a break above that level. And during sort of kind of into January, got above that level. We thought, oh, okay, here we go. We're above 14,000. Going to carry on. That's a sign of the trade talks doing well. But then actually, pretty much straight after, you can see what happened there. Okay, that's sort of end of January. This is when we started to get news of what was going on in China, in Wuhan, and the COVID-19, and whatever your beliefs about where that may have come from or how that has originated, we were seeing that, and we started to see that market fall quite rapidly, as you can see. And this, for those of you who are members of the FX Intel newsletter, I was saying this was the kind of surprising thing for me, is that as we started into February, as we saw what was going on in China, we just still saw certainly Western markets just moving to all-time highs. There's just kind of a level of complacency that, regardless of what was going on in China and spreading really fast, just Western markets just didn't care, just carried on their merry way for about 3 weeks into February. The interesting thing is that here in China as well, actually, the Chinese stock market, all right, the Chinese stock market was actually rising, even though they had all of that stuff going on. The the only idea that I can have, and it is pure speculation on my part, is that this was probably the Chinese government kind of trying to prop up their own stock market. China, it's all about saving face, so invariably this is them sort of just trying to prop up the stock market to invariably give the appearance that everything is absolutely fine in China. Nothing to see here, move along, nothing to see here. But actually, as you can see, and in many ways it was kind of nice the way it came back, kissed the trend line and fell, and came back up and kissed the trend line, and this is what we've had. Okay, and interestingly, I suppose, as it's the contagion into Western markets, that has come back, and that's had blowback on Chinese markets because, of course, if demand in the West has collapsed, well, then it doesn't matter how quickly China gets supply back online. If demand has gone, well, then those Chinese companies, they're going to struggle as well. So it's kind of interesting to see how they've played with that, okay, and how that has played out in Chinese markets. As I said, I don't trade them, but I do keep an eye on it, okay, and it is worth it. I mean, it is a big global market player. As we've seen over the last month, it has a massive impact on both Western life and also Western markets. So it's something you should, just keep an eye on a regular basis. So anyway, so that was that. What I also thought I would do is about a year or so ago, I did a very quick presentation saying that how to trade through the coming correction. I did that it would been about maybe 12, 15 months ago. It took a bit longer for it to come about, but for those of you who are active traders, I talked about one of the things you can do to help yourselves is to have a HOS account, all right, a HOS account, hero or zero account, and this is for what we've experienced over the last month, having it for those day of days, which we've had a few of recently. And as I put there, there was like during every correction there will be a day of days, there will be opportunity, there will be days where it is just the natural thing for that market to collapse. That's what we've seen, and that's the opportunity for you to sort of get on board. And what I talk about is in having a HOS account is actually having an account completely separate from perhaps your normal trading account, because if you're trying to establish a track record, that allows you to seek funding as a trader, well then yes, it might look good that you've had a few big wins on your trading account, trading through crashes, but it distorts your figures, it distorts your numbers. People will, investors will look at it and start to worry and wonder about what's actually gone on there. Okay, so it's about having a bit of a bit of a separate account for times like this, having a bit of a HOS account to help you with your own particular trading. And what it should be is very often it should be a totally separate account with normally with a different broker. Okay, having a bit of diversity during times of volatility is no bad, and then it should contain a maximum of about 2 to 5 of your trading capital. So what I normally suggest is that if you've had a few good trades, is that take that profit out and actually put it into your HOS account, so that it's only making up 2 to 5% of your trading capital. As I said, it's a hero or zero account. All right, it's an account that allows you to trade these markets, okay, aggressively without putting everything on the line. All right, because that's what I see with new traders with small accounts. They think, all right, here's my chance, okay, I'm just going to use this to just take my account from $5,000 to 500 grand in a week and stuff, and is that possible? Yes, it is, and I know people have done it, but it's survivorship bias. You hear the people who do that, you don't hear about the people who blow all of their trading accounts on this. Okay, so as I said, this is where a HOS account comes into its own. All right, to just have a small HOS account that allows you to get some access, but without basically sort of selling the family silver, so to speak. And when there are those days, or when there might be, like, let's say, some trends that run for a day or two, okay, it's about get prepared to be a hero or zero by the end of that day of that week, hence why you only allocate a small amount of capital. All right, you will have already seen it yourself. If this is your first kind of crisis that you're getting exposed to, you'll see that that when that market collapses, it can collapse beautifully. Equally, it can turn, on a sixpence and go 400 points against you very, very rapidly. And what do you know that, that's when the time when you're a retail broker, those spreads are going to widen magnificently. Also, the likelihood of you having your stops honoured, or if honoured without massive slippage, well, then suddenly that becomes quite apparent. So hence, as I said, having a hero or zero account is no bad thing. Okay, it's as I said, it's only like 2 to 5% of your overall trading capital. It's not, you're not betting everything, but it gives you the chance to take part, to have access if you feel that you have an edge, that you can access these markets, but without you betting the farm on it all, so to speak. So there you go. Yeah, and as I said, it's to aggressively attack market opportunities during those topple weeks, and we've certainly had a few weeks of that. And We'll look at the markets in a moment. I'm not entirely convinced that that is finished. All right, I think there'll be maybe one or two last flushes. We'll see, but yeah, we'll look at that in a moment in the charts. So yeah, I just wanted to share that with you, just give you some little bit of food for thought whilst you do it. Now, if you just bear with me, what we'll do is I'll switch across to some charts. Okay, as I said, as always, if there's some charts that here we go. If there's some charts that you're interested in, or there's something you particularly want to have a look at, I don't mind. Give me a shout. Okay, I suppose I appreciate that people are interested to get other views, insights, especially when people are struggling. They sometimes think that if they don't know what's going on, that they can get some insight onto what is going on. What I can tell you, ladies and gentlemen, is if you don't know what's going on, don't be too hard on yourself, because nobody else knows what's going on either. Okay, there'll be some people who've got access to information, but the vast majority of people are trying to make the best speculation based upon the information that they have to hand. Yeah, there probably will be some people with some edges, but the vast majority of people won't. Okay, and it's a case of just having to trade what you see. So let's have a little look at sterling. Okay, there's a few things that have been interesting over the kind of the last here we go, over the last well, pretty much 24 hours since I spoke to you. Really, that's what we've seen. I'm just going to bring these up to the 4-hour charts. That'll be easier to look at. Okay, and kind of the interesting thing is that here we go. If we just look at cable, and this is kind of interesting because I'm going to look at this when we look at gold in a moment as well. Is that yeah, we talked about this. It's been battered, but actually what we had there, okay, overnight, all right, was we had a key reversal, a 4-hour key reversal, and actually from our lows of about 114, we went up to about 118.60. Okay, so we actually overnight we did about 400 pips north just in cable there. Okay, and it's running out of steam there now. I'd be kind of getting interested in interested to see where where it goes from here as we go into the American session. But definitely we saw there was that move in sterling, euro against sterling here as well. Remember we were talking about it just started going straight up, but actually over the last day or two, ever since Mr. Lagarde had a word the other day, what we've seen is invariably there's been a bit of a sell-off in the euro there as well. Okay, so that's kind of as I said yesterday, a week ago, head of the ECB, Christine Lagarde, was saying it's not my job to manage the narrowing of bond spreads. And then a week later, on this Wednesday just gone, she says, I'm going to spend 750 billion euros of your money to narrow the spreads on bonds. So there you go. That's how to lose credibility in one quick move there. Okay, but ultimately, what we're going to find is politicians across all hues, across all places, are going to basically say whatever it takes and do whatever it takes to make it work. But for sterling, it's just been a bit of an overnight move. Okay, there's definitely overnight moves, and that's the kind of interesting thing to look at, because I want to have a little quick look at yen for us. Because actually what we saw was what we saw for the most part was actually just a bit of a sell-off in yen as well. Okay, just a little bit of a sell-off in yen, nothing to get massively it's not the end of pain or anything like that. But what we can just see here is, if I just once again put these all up to 4-hour charts, okay, is that actually we saw basically just even the Australian dollar and Kiwi dollar, all right, who have been absolute whipping boys, even they have managed, okay, over the last 24 hours to basically to gain some strength against the yen. Okay, now why is that? Is that because they think they might have found some vaccines in America? They think that's because of comments made by the sort of the Chinese, and the fact that it's they've not had any new cases. Take your pick. To be honest, that would be my view. Take your pick. Whatever bit of news fits your frame of the world. Take your news and you'll use it as confirmation bias. All you're interested in is you're just looking at that. Okay, you can see that the yen has weakened a bit. Okay, the yen has weakened a bit. Not so much against the euro and Swiss euro and Swiss franc. That's actually, I look at that as it's just coiling up there, the euro and the Swiss franc against the yen. So maybe there's something of interest to go on there. But yeah, but you know, we've you know, there's definitely yen has kind of come off a little bit, as has the US dollar a little bit. That shouldn't really be a surprise for us after what we've seen. Okay, remember I was talking on, when was it, Wednesday? It seems like a week ago, that about what we were sort of what was happening with dollar. Well, do you know what? It's no surprise that actually that has just, there's clearly been a bit of profit taking going on there. All right, clearly a bit of profit taking. Why wouldn't you if you've been long dollar? You can see yourself there. Okay, that's kind of like a nice 4-hour key reversal there, and we've kind of just drifted away down from it. Now, my view and opinion would be that this is going to be an interesting session coming up. All right, Friday afternoon session. That will give us an indication of how people feel after the week they've had. Right, we'll get to see, right, how people feel. Are they feeling confident? Are they feeling a bit fed up? Are they feeling a bit, anxious still? Are they feeling that the panic is over? It'll be an indication of that. So watch the American session this afternoon. Watch the end of the American session, coming into the end of the American session, because it's going to be a case of, are there going to be a lot of people dumping positions because they just don't want to hold any weekend risk? Okay, and for all of you as traders, that's what we're suggesting, right? I said it a few weeks ago in a couple of our posts, at the time, don't be holding weekend positions, because you can bet your life at the weekends, central bankers, politicians, every man and his dog who's got a bone in this stew is going to be is going to be sort of trying to coordinate what to do next week. All right, and as actually we've seen for the last 2 weekends, okay, it's been news that's come out on the Sunday evening, Sunday night, whether it be the oil, whether it be Powell's comments, okay. So that will be, just watch that, okay, as we go into the sort of into Sunday evening. Just be sensitive to any information that comes out, because that might give us an indication of where central bankers believe they are at the moment. Okay, so if I'm just looking at that dollar CAD there. To me, I see that as actually that's a bit of a head and shoulders pattern there. Okay, finished off with an engulfing candle key reversal there. Okay, which just effectively has just rolled over and done some nice work there. Okay, on that 4-hour chart. Okay, so yeah, clearly been a bit of dollar profit taking after what we saw there. I am here we go, cognizant of the time. Here we go, gold. This is what I was kind of interested in. So I talked yesterday about how I'd missed out about a week or so, 10 days ago, and I was just waiting to see what was happening here. And kind of what was curious, I kind of alluded to a little bit here, is that price I was looking at was effectively I saw it as like kind of a little bit of almost like a descending triangle in a downtrend. Hopefully you can see that there. So just kind of alluded to a little bit yesterday. And what I'm interested in is that we clearly had quite an interesting overnight Asian session, and what I was interested in here, as I'm looking this morning, was that this was like a false breakout. Okay, false breakout here. Okay, which is one of the trades I love. False breakout comes back. It's a pin bar. It's an engulfing candle. It's a key reversal candle. It closes higher than the high of the previous candle before we get a nice bump up there again. We actually, we had a kind of a nice bump up there of about $35 in gold. All right, woomph, up it goes. Very nice. None of us got it because it happened overnight. All right, but it's we want to be taking an interest in that. At the moment, I look at that as it's a bit of a double top there. So what I would like to see is, personally, I want to see if I get a close above 1500 at the end of this week, then that would give me a bit of interest. I would still be expecting, maybe what I'd be interested to see is will it come down and touch and go. That's it. But invariably, that's my plan for 10 to 1 on the Friday afternoon. That plan could be completely out the window by 10 to 3 or 10 to 6 or 10 to 9 by tonight, depending upon what price does. Okay, but at the moment, that's the way I'm looking at that. So it just it's just additionally just giving us an indication that there was some big work, some big plays going on last night. Okay, in those markets, and we'll have to see what happens. Even look at oil. Okay, came back a little bit. If you look at oil there, okay, from where we pushed down to, okay, at the 20. We got up to $28 reversal, but look at it going into the American session already, and people are getting ready to dump it, aren't they? So yeah, let's just was that just a relief rally in the bear market? As I said, this coming session is going to be pretty yeah, pretty interesting for us. And let's have a look at, just finish off with some of the indexes. We didn't really touch on these yesterday. I'm just going to put this onto dailies. Okay, so when I look at these charts now, okay, my view would be, here we go, so just put them onto the daily and you can see how all very similar they are at the moment. My view would be that, I'd be looking at that as there's a, we're taking a pause here. Okay, we're taking a pause. That's the curious place we are at the moment. Okay, the Dow. Okay, let's just draw in a 24 line. I think for myself, part of it we'll be looking at, well, how does the Dow close at the end of this week? Can it close above 20,000? Okay, will it hold above 20,000? All right, that to me would be that to me would be about as positive as anything can be at the moment. But if you look at the price action, the last few days, it's been pretty similar. Everything's taking a bit of a pause, maybe even the bonds, but even like DAX, the last couple of days, it's just the slowing down. It's going sideways. Okay, a little bit of a double bottom on FTSE there. Okay, would that tempt me to be buyers? It's normally a pattern I'd love to see. Not really, not at the moment. As I said the other day, I'm happy to let the market play its hand and then try and jump on board a new trend. I'm not trying to be a hero and pick tops and bottoms in markets, but I'm definitely aware that is, that's kind of a nice double bomb. And once again, equally, can we close above 5,000? All right, can we close above 5,000? That will give a little bit of respite, a little bit of a relief this week, and that's what we'll take a look at. Okay, there, ladies and gentlemen. So unless you've got any particular questions or anything, any particular chart you'd like me to have a quick look at for you, I'm happy to. If not, we'll end it for today. As I said, I only want it to be 20 to 30 minutes, and just keep you abreast of what I see, what we're looking at. Okay, just let you know that there are people out there who are looking at this. That that you're not alone. That yeah, and that if you don't know what's going on, don't worry. Nobody else does either. Everybody's just trying to sort of, make a decision based upon the information that they have to hand. Okay, so let's just have a look at this. You're welcome, Charlie. All right, Charlie says thanks, Paul. Very useful. Yeah, you're very welcome. You're welcome, guys and stuff. So yeah, what we'll do is we'll call it a close there for today. As I said, this should be. He said, I hope it should be. Yeah, it should be recorded and stuff. So once it's rendered and stuff, I'll put it up in the sort of usual places for you to have access to as well. All right. And as I said, do well, have a look at it, and yeah, I'll do it on Monday again. Okay, Monday session again. And yeah, as I said, don't hold over the weekend. All right, just watch to see what, if any, news we get on Sunday night before the markets open. And yeah, trade well, ladies and gentlemen. I'll speak to you soon. Cheers.